going off on that thing. And it's just, it's different. It's small town. It's a unique thing.
You know what has me just invest in the stock, crypto, and options market. I'm not sure which one you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Thank you for that, Gerardo. All right, market update. Let's just dig in. First off, before I say too much, let me just show you the economic calendar for the week. Nothing for tomorrow. We've got the Chicago Fed activity coming out today. Nothing there. San Francisco Fed President Mary Daly speaks on inflation. Guess what she's going to say? It's high. It's going to stay high for a little while. And then Tuesday, nothing. Wednesday, we've got jobless claims coming out, the manufacturing PMI, new home sales. So Wednesday is a fairly interesting day with jobless claims and PMI. And Thanksgiving holiday is off. There is no market on Thursday, and Friday is a half day. So note that this is a time of the week of the year where things slow down. The trading volumes will slow down. People tend to take breaks. Certainly at the end of the week, you won't see much activity on Friday. So we're not going to see a whole lot in the news. And I checked the news today, of course, as I always do. And
you got your screen?
You didn't see the screen? Oh, crap. Come back, crap. After all of that stuff with the music, I forgot to share my screen. Oh my goodness. Let me just get that done. I apologize. Fortunately, I haven't shown anything yet other than the disclaimer. So let me share that real quick. Disclaimer right there. I'm just going through the market calendar. And as I was saying, not much is happening this week other than Wednesday. Durable goods orders, capital, jobless claims, those are the main ones. And the manufacturing PMI, producers management index. And that's the main thing. Nothing on Thursday or Friday. Friday half day, Thursday all off. So that's what's in store for this week. And traditionally, even in Tom's Fold, we tend to take the entire week of Thanksgiving off because it's a light week and the news is light. Other than a few pre-market things, Walt Disney is in the news, and both on. Let me take you back to the main page here. So Eisner's coming back. He was one of the guys really instrumental in driving Disney shares higher. He left a few years ago, and now he's coming back. And his return to Disney is seen as a really big positive news on Disney. Let's take a look pre-market at Disney. So Disney is trading, Friday's closed 91.80, and it's currently trading at over 100.8684. Let's call it 0.85. So Disney's right up above the 50-day average as we speak. So a gap up. That's a perfect sniper candidate. So we could come in once the market opens at 9:30 in 27 minutes, come in and look to see what kind of credit spread we can sell underneath. Now, I like to do these as soon as the market opens because IV is elevated. You know, big news. People want to come in and start buying and selling Disney options like us. And there's usually a lot more volatility, implied volatility in the morning than there is in the later in the day. So I like to do these first thing. So Disney was in there. Carvana was another piece of news that I saw. CVNA, Carvana. Oh, look at this thing. You know, the news that I saw was that they laid off a bunch of people last Friday. And let's see, what did I see? Cut shares, dropped. Anyway, what I saw was there was an analyst that came out and said Carvana will run out of money next year. Now the stock's at $8 pre-market. It's down to $7.64, so it's down a little bit. So this stock's in trouble. Maybe we come in and sell a bearish credit spread. I do like the idea of butterflies on these. Now this is snipers. We're not generally so, we generally go into butterflies so much in snipers, but the stock's sideways to down, perfect for a credit spread as well. So we'll look at that. Argus Yeah, there we go. Argus Research downgrades Carvana to sell at 8:46 this morning. That's 14 minutes before we started. So that's new. I didn't see that. So we got a sell recommendation on Carvana. That is the worst piece of news a stock could get. And also during I checked their earnings before, they also lowered their forecast for next year, cutting employees. This stock's in trouble. Let's swoop in, sell some credit on Carvana. So that's on my list of stocks this morning. I did a quick look. Carvana, Coinbase, all the crypto stocks. We've done well. We'll look at our portfolio here in a minute. So all the crypto stocks, bearish, bullish on Disney, and then bearish on Carvana. And then also shopping malls is up too. So we'll come back to these in a few minutes. I want to look at the overall market, get an idea where we might be going next. But there's a handful of great sniper candidates that took me about 15 minutes to find. Just what I did in front of you here. This is the kind of stuff that we like to swoop in on, have news-backed credit spreads that are technically based as well. So technical analysis suggesting a particular direction or non-direction, coupled with news to keep the stock moving in a particular direction. So those are some great candidates for today. Let me finish up with SPG, shopping malls, Simon Property Group. I mean, just really a good looking chart. The news that came out recent, let me dig into the news here on this one. Simon Property Groups. I think I saw it on. No, I didn't. You know what? You know where I found it? I found it using scanner. So we'll look at that in a minute. Anyway, those are my hit list stocks for today. We'll do something on at least one or two, or maybe a few of those, more than maybe all of them if we have time. All right, let's take a look at the futures just to recap, so you can all remember the future symbols. I put them up from time to time. Here they are. I'm going to move into all of these here. Bitcoin is going to be on our list today. I want to definitely look at Bitcoin and Bitto. Let's look at the futures and see where we are right now as I speak. I'll start with the S&P 500. Just kind of hanging out here. We've got this, we still have this downtrend, everybody. This is the all-time high here. And if we go from peak to peak to peak, we are still in a downtrend. The market the S&P is below 4,000. It's finding resistance at a round number of 4,000. There's also strong resistance right up here at 4,061. So we do have lots of overhead resistance. We have potentially a down movement. The S&P is down 0.37%, so it's pretty flat, consolidating. But if this trend continues, then we're due. We're very, very close to being due to another downward leg over the next handful of weeks. Some of the market analysts were coming out and saying that I think it was Bear Stearns or Goldman came out and said today that they're expecting another trough. So they're expecting this series of lower highs and series of lower lows to continue into next year, into 2023. So, and the word recession is being thrown around. Good chance of further downside from here, technically speaking, as well as economically speaking. Let's take a look at the NASDAQ. That's the /NQ. Same pattern. High, lower high, lower high, lower high. Series of lower lows. Oh, there's a bit of bottoming here. So we'll see what happens with the Qs. Same pattern there. We've got the Russell 2000, the small caps. Same pattern, series of lower highs and lower lows. Again, bottoming here over the last couple of months. And then let's look at the diamonds, or not the diamonds, but the Dow /YM. And this is a different story. There is a series of lower highs, but now we're coming back up to not a lower high. Oh, we're close to it. We're at resistance here, right at 34,100 or so. So there's some strong resistance there. But if the Dow breaks through, that could lead to at least the Dow stocks higher from here. What else do we want to look at? Let's look at Bitcoin. We what's happening in the Bitcoin coin world. Bitcoin's taking it on the chin. I was listening to Bloomberg this morning and watching the TV show, and the next stopping point is forecasted to be about 13,000, 12,000. This pattern here that I keep talking about, look at that flag pattern. All right, it's really, the flag's getting really tight here. So here's your pole, the 2-day pole, and then you've got a series of lower highs and higher lows, consolidation. From there, expect a breakout of some sort. There should be one based on this particular consolidation pattern. So Bitcoin looks poised for a further sharp run. I'd be surprised if it was higher, given the fear in the crypto market. One of the top 3 brokerage crypto digital exchanges went under, brokers went under. So lots of fear. Why would Bitcoin spike up from here? I think more likely we'll see further downside, and perhaps even a sharp further downside like we just got on Bitcoin. And of course, that will take stocks like Bito, Riot. Those are Bitcoin mining companies. Those will go with it. And then we have Mara, which is, did I mention that one? Yeah, Mara is another. Bito is an ETF. Mara and Riot are Bitcoin miners. So those are on my list today. Coinbase is another major broker also on the Bitcoin list. So there's some opportunity there for us. So we'll spend some time on that as we go further along. Let's take a look at what else we want to see. Let's take a look at bonds /ZB. Bonds seem to be on the rise. They are on the rise. Yields are higher. Fear of recession in the future. Looks like bonds are on the way up. So I'm going to have I have a slightly bullish prognosis. Even though interest rates are going to be lifted, demand for bonds is starting to come in because they're paying more money because of interest rates that have lifted. So bonds are attractive, becoming more attractive. And I have at this stage, a bullish prognosis on bonds, at least for the short term. Let's keep an eye there, though, as we always do. Let's take a look at gold. Well, before I do that, I want to look at the UUP. The UP seems to have bottomed, maybe 28.50. Gold moves opposite to bonds, and see what gold's doing today. Gold is down half a percentage point today, probably because the US dollar is bouncing. So I don't see any risk off there. For there to be a risk off, of course, gold has to be rising, and it's not. It's dropping pre-market. Oil down a little bit. We got strong support here at 75. We'll see. Further downside looks imminent. That's really all I have, everybody. Let's look at the VIX real quick here. The VIX futures /VX. These are the VIX futures /VX. This is the futures market for the VIX. And you can see that it's up slightly. Came up last week. Let's look at the actual VIX. And options are in the lower third of the range of the VIX, roughly. So I'd say options are fairly inexpensive at the moment. So feel free to buy options if you want. You can still sell them, of course, but straddles and strangles, if you're in the earnings fold, will perform better down here when the VIX is this low versus up here when the VIX is that high. Okay, let's pause and see if anybody's got questions or comments or anything you're looking at that I haven't mentioned. What are all of you all looking at? I know Marcia mentioned Duke Power, which we'll look at here. And
I've
if you
got
have
a trade on Dix that I've got to exit today, Mike.
Okay.
And I'm thinking that's at the last hour.
What kind of trade is it?
It's a straddle. Hold on, let me pull it up here. Yeah, it's a straddle at 109. It's been DNA'd a bunch of times.
Mm-hmm.
So and earnings are tomorrow, I think, or tomorrow morning.
Yeah, you want to be
Yeah.
out of this by 4 tonight. Yeah.
Yeah, right. Okay.
Yeah, pre-market, the stock's up a little, pretty much
So
where it closed.
109, 108
Mhm.
pre-market.
Yeah.
Yeah, I DNA'd it a day or two ago. So I'm
Okay.
at 109. And
Great.
I'll make money. So
More
collapses.
money. Good
Yeah.
job, man.
Yep.
Excellent. Thank you for that.
Out.
All right, out. Thank you, buddy. Marcia mentioned Duke Power. I love these sell recommendations. I really, really do. Duke Power. The thing I don't see here is why. So here's Duke Power, utility company in Durham, North Carolina, where I went to high school. Duke Power downgraded to sell from neutral at Seaport Research. I don't see it. There's no dialogue about why. I don't see any reason for the sell recommendation. So I'm gonna Carvana. We have lots of data about Carvana, but I don't see any on Duke Energy. So it might be worth a look. Pre-market looks like the stock's not really moving too much. So it doesn't look like that news is taking hold. We'll take another look at it when the markets open up here. So let's go back to my list here and start digging in. So we've got Bitto, Riot, and oh, you know what? I'm sorry. Here's what I also want to do in the next 15 minutes before the market opens is let's take a look at our open portfolio. Now you'll notice there's two big losers, current losers, and they happen to be long-term credit spreads. The other winners that we have are short-term credit spreads. We had a bullish credit spread on Applied Micro Devices. We have a bearish one on Bitto, and we have a bear call. This is also a long-term bear call on KRE. And let's just go through them one by one. I'm going to just go down the top of the list here, and let's talk about what there is to do. So AMD was a bullish credit spread we placed this time last week. It survived the weekend. This was Friday's close. 269 was Theta, with the stock way up here. Let's see where AMD is pre-market. But because this is really cool about credit spreads. You really got to get this now. On Friday, the Theta was 269. What does that mean? That means that on Saturday and Sunday, each of those 2 days, you make $2.69 in Theta, while the stock can do absolutely nothing. It's free Theta. And guess what? We have Thursday and Friday, free Theta, half day on Friday, a day off on Thursday. I would love to find some credit spreads that expire a week from today on Monday. Why? Well, we get Thursday Theta, we get a half day of Friday Theta, and then we get Saturday, Sunday. That's 3.5 days of Theta for free. The stock cannot move when the markets are closed, but Theta does. So that's where I want to play today is to do some credit spreads. There's no better time than to get all this free Theta during holiday season. So when we do these scans here in a few minutes, we're going to be looking for Monday trades. So this one here expires on Friday. Again, this already has free Theta in it. I would imagine today when we open that this thing will be virtually worthless. We could buy it back for a penny. Already we could buy it back for 2 cents here. So I would imagine today this will be taken off for a profit. You could leave it, let it expire as well if you like. If you don't believe that AMD is going to crash between now and Friday expiration, that's a good idea. Bitto is another. This is the ETF that tracks Bitcoin. Yeah, again, 2 free days of Theta at 177. We made 345 or so over the weekend. And we can buy the spread back for 2 cents, having sold it for 10 cents. This is one where I might let it expire worthless. Yeah, I would just let this expire worthless. The prudent thing to do, though, is always to buy it back for 10%. If you can buy this spread back for 1 cent, then you're out, and you don't have to worry about any potential gap up. So those are short-term credits that work really well. Let's take a look at Chevron. George, I think you got out of your Chevron what came to be a butterfly. This is what I adjusted it into. And what I did was I contracted the upper spread, and then we bought another spread underneath to cap our risk in the trade. And so I'm looking at this thing going, what do I do? Well, you decide what to do based on the Greeks. Now, starting with, where is Chevron going to go? Well, I think probably not down at this stage, but it could go anywhere. Probably not down, possibly further up or sideways consolidation in this area here. So if my prognosis is sideways or up, now up, I could lose more money. How much more could I lose in this case? Now this is where you want to rest. First off, the maximum risk in this trade is $405. The current realized risk is $357. All right, so how much more can you lose? 43, 48 bucks. So when you do this adjustment, you've really got to get that into your DNA and relax. All right, can't get much worse. We're trying to resuscitate this trade. We've capped our risk. I think the original risk was what? It was a lot. It was $1, $9. It was, let me just take you back to the beginning. So we started on 9/23 with $882 of risk. And then we did our adjusting as the stock broke out to the, and where we didn't expect the stock to go, we dropped our risk over half. So max risk in this trade is half of what it was, less than half of what it was before. So then you decide what to do. And I'm gonna wait on this one. The Greeks are okay. There is a chance the stock drops down into the body of this now adjusted butterfly and we make a little bit of money. That's a possibility. I can't lose much more while we're waiting. So that's this to me as a whole. The Greeks are flat. My theta is slightly negative based on where we're at here. You can see that.
Mike, there was a negative report coming from somewhere that said that Brent might drop $10.
Oh yeah?
Yeah, on the basis that China was closing down a little more. I just saw it flash by. I don't know who said it.
Yeah. So there you go. There's a reason to have a slightly bearish prognosis on Chevron. And so we just hold. There's no rush. That's the point. There's no rush. What's up with Chevron? It's down to 180, 179, 180 pre-market. So it's coming down a little bit. Yeah, so I would hold. Now, if that happens today, we're going to make a little bit of our profit or loss back. But at some stage, if you have, for example, if you had a bullish prognosis, you're like looking at your resulting spread, and I'm going to hit the close so you can see what we have now is the 170, 175 long call spread, and then we've got the 165, 170. I'm sorry. Let me start over again. I'm still got it. I'm still tired from my travels, and I'm at my mom's house and just trying to reorient myself. So we're going to close this down. We're going to buy back the 170s. We have the short 170 calls and then the long 175 calls. Okay, so that's the bearish part. And then underneath, we have the long 165s and the short 170 calls. That's the bull call spread. So the light blue lines is the bear spread. The dark green is the bull spread. They're all made with calls. So for example, if I'm looking at my trade, let me pull it back up. And again, let me redistinguish that. So you have two trades here. These are the closing legs. The green lines is the bull call spread. You own the 165, you're short the 170. All right, up top, you're short the 170, you're long the 175. That's a bear call spread. So you have two different spreads. One's a bull and one is a bear. So when you're looking at this trade here, you're like, well, I just don't think the stock's going to drop. Let's say that's your prognosis. I think we wait. I'm not worried. I'm going to wait on this one, but let's just go through the exercise. So you're looking at this trade and you've got a bear spread and a bull spread. The bear spread's risk is here. The bull spread's risk is there. So you could say, I don't want to hold on to my bear call spread because I'm going to lose money if the stock goes higher. So you could simply close off the bearish part, which is the higher spread. So I'll close down the bear call spread. Oh, let me get the right numbers. And that's going to leave just the bull spread, the bull call spread. And then you get that risk graph. And so now you're looking at it going, well, I'm down 357 today. As long as the stock doesn't drop, then I'm going to make some of my money back and I'll net a loss in this trade of 297. So that's about $60 a recovery if you make that adjustment. And then while you're doing that, look at all the risk you have down here. You're back to your $800 of risk. So those are the kinds of adjustments you can make with these. I'm not ready to do anything with this just yet. The bad news about oil perhaps dropping could put us back down here. In practice, what I do and what we talk about in the hedge fund course is we place bullish and bearish broken wing butterflies up here and down here. And then our game becomes, let this thing ride and let's see if I can go out and make $405 using other trades on top of this one. So that's surrounding the stock. We have this butterfly, and then we put a bull up here and a bear down here. If you're in a hedge fund course, you know all about that. And it's really beyond the scope of snipers. As you know, this is starting in December. We're going to start teaching more in this course in the snipers on Monday mornings. Some of other strategies in Tom's tools. So again, that's beyond it. And if you're in this trade and you're in hedge fund, you've probably done some of those things. Okay, now the other one. Well, let's just go down the list. CRE, regional banks. Beautiful. That's just sitting real pretty. 28 days left. Stock is well within the break evens here. Good chance this thing is just going to hang out, and Theta is going to do its work for us. And we have a good shot at making 25+% on this trade at expiration, which happens to be right before Christmas. We can call this our Christmas trade. We'll go buy some Christmas presents with the profits from that one. That looks really, really good. And then this one on Northrop Grumman, this was a long-term bull put spread. And then after we placed it, Northrop came down here, and then we came in and we sold some extra put spreads down here to, we contracted, first off, we contracted the upper spread to reduce risk. And then we sold some put spreads underneath to create this gorgeous Matador, essentially. And now, because slippage is so wide, it looks like we're down a lot on this trade. But once the data normalizes, we're going to see a nice little risk graph here. This one's performing very well as well. So although it shows $605 of loss, once the slippage normalizes, we're going to be in really good shape on this one. Probably around 10 o'clock, we should see some better data on that.
Hey, Mike, could you go back to the KRE trade?
Yeah.
What percentage have you made so far?
We've made 14%.
Okay, all right, thanks.
Are you in this one?
No, I'm saying if you were at right now, if you were at 25-30%, you may take the trade off potentially.
Yeah, absolutely. Yeah, I agree. Agreed. And we're in a really good spot right now because we sold some spreads down here, and we still have 2 points between each credit spread. So we started with the bear, and then we sold the bull a month later for 19 more cents. They both have 2 points between. So if KRE makes a strong run up or down between now and December, we can contract this spread here, squeeze risk out. We can do the same up here. If it goes up, we can slide the credits up and down, get more credit. But yeah, we're in a really good spot on this one. Okay, we got 2 minutes before the market opens. Let's start looking for some opportunities. Here's my list. I would write this list down if I were you. Crypto opportunities. These are bears. Let's say crypto bears. Bito, Riot, and Coin. Bull on Disney because of Eisner. Carvana because of its sell recommendation. And then, what was it? Somebody said that they were going to run out of money next year. I think it was Morgan or Goldman or somebody. One of the bigger analysts came out and said they're going to run out of money. I shouldn't laugh, but they're going to run out of money next year. So we could come in and sell credits on Carvana as well. So we got just a few seconds here. The market opens in 20 seconds. I love this sound. This is one of my favorite sounds I was talking to Gerardo. He and of course, I'm helping him with trading, and amongst other things, we're helping each other. And he said, I said something last week that this to me, trading to me is a game. It's literally a game. The stock market itself is a game with rules. And our game is to come in, get an edge, paint some pictures, adjust them, paint different pictures, and we get to play. So it's literally a game. And it's a nice context because it encourages you to have fun and play around with it and not get so serious about trading. So that's the game. I love it. It's always fun for me to watch the open, and we're flat as we open. The market is down. The S&P is down 0.2 something percent, 0.29%. Everything's pretty much flat. It's going to be a flat week, I think. Let's take a look at. Oh, Bitcoin is down 2.3%. Yes. So then our flag pattern, there it is. This breaks the flag pattern. That could be the start of a big breakdown. I tell you, these crypto companies, Riot, I've made a lot of money on Riot thanks to Gerardo giving me a trade. But this was a really beautiful bearish broken wing butterfly that we put on. I'm still bearish on Riot, bearish on Bito. Bito tracks the cryptocurrencies, in particular Bitcoin. So you can see its flat pattern, a bit of a gap down there. So we could sell bear call spreads on Bito, Mara, which is a miner. Same thing, Riot, miner. So all of these are good trades. You don't want to do all of them, because they're tightly correlated. But we've got a handful. We could go out and just go see if we can find some bear call spreads. Now, the fastest way to find bear call spreads is to go right into Tom's tools. And well, you don't even need the advanced scanners. It's actually one of the basic scanners in Tom's tools called credit spread. And this was actually built this new credit spread scanner was built when the markets were coming down during the emergence of COVID-19 and the markets were tanking. What I was looking for when I was trading it, and I did really well in that market, was what I do is I would go out and find short-term credit spreads where I'm finding stocks that are breaking down and breaking through support, and then I'd sell credit spreads at that level. And so the scanner baked in, when you just come right in here, default parameter short term, just click that. It's always going to find the stocks that have dropped down the most over the last day. Okay. Now on the bullish side too, if you want to do put credit spreads, it does the same thing, but looks for activate up. So without even knowing any of that, you just come in here, you could say, all right, based on Friday's data, let me just run default parameters short term, look for the tanking stocks, the stocks that are dropping at least for a day, and let's see if there's anything on the list. And when I found this today, there's one on the top of the list. Hey, guess what? It's cryptocurrency. And guess what? This is Mara. It's a crypto miner. And guess what? There's trades that expire on Friday. What? Friday. Well, Friday, there's a half day, and on Thursday, there's no day of trading. So wouldn't it be cool if we could put on a credit spread that expires on Friday of this week? Yes, it would. Here's the trade. It's kind of coincidental that this came up right on the top of the list when I wanted to talk about cryptocurrency today. So there is what it was on Friday. This is selling an 8 call and then buying a 9 call above, generating a 23% profit over 7 days, provided the stock stays above 8 between now and stays below 8 between now and expiration, 82.5%. Now, the stock has dropped today. Let's take a look. So this is going to be how I look for them live. You don't have to wait till 10 o'clock. And if I look here, the stock is now at 705. All right. So I'm going to go into trade here. Now, we don't have data in Tom's tools, as you know. And so what I've just done is I've typed in the symbol. I want to look for options that expire on Friday. I really want these. What can we get? Free theta. I'm going to make this vertical spread here. And here, what we can get, these are 50-cent spreads. I'm looking at the calls. The question is, how close do I want to get? Do I want my line in the sand to be at 7, 750, 8, 850, 9? Now, obviously, the higher we go with our line in the sand, our short option, short call, the more money we're going to get. The closer we get, the more money we get. The further we get away, the less we get. I like 8, 750 maybe. Let's go to a chart. Yeah, 750 is a good level. It's the bottom of the bar here. We got a gap down, but we're not far away. If we sell at 750 right here, and the stock is at 716, it's only got to go up, what, 34 cents, and we're in some hot water. So the only place I would sell on this is 8. That's it. No closer than 8. And if we did that here, we can get about 7 cents, 8 cents, maybe a bit more. Let me go ahead and represent this in Tom's tools so you can have a visual of what I'm talking about. And actually, I'm going to try the 9 too. 850. Let's just try to buy the 9. I just want to see if there's what the
I'm showing a mid of 10 cents on the 9.
Yeah, but
Buy
you got to
the 9,
remember,
sell
hold
at
on.
8.5.
You got to remember that one spread is 50 cents and the other is 10 cents. So it's not just that the 11 cents is more credit. There's also more risk. So remember to calculate that. So we got 8,850, which is going to give me 8 cents. My risk, maybe 8 cents. My risk is 42 cents. That's almost 20%, which is great. Here, if we do the 9, we buy the 9, we get 11 cents. Our risk is 89 cents. So it's pretty close. That's what I wanted to check.
Mike, you're selling both of them there.
No, it says sell minus 10, the 8, buy plus 10, the 9.
I'm not talking to you.
You're not
Oh,
talking
is that
to
a
me?
plus? It looks like a minus to me. I'm sorry.
That's okay. That's a buy. You can see it right there. It says buy. Yeah, so we're selling and buying. So let's try the 850 risk graph. And then what this software is saying we can get, what the Thinkorswim is saying we can get on this is 7 cents. That's a no-brainer.
I got 10.
You got filled at 10? On the 8,850, I doubt it. 10 cents on the 8,850?
No, I did that 8.9.
Okay, let's, yeah. All right. So now, this is quite a gorgeous trade here. This is what's available right now. Selling the 850 call. Oops, sorry. Selling the 8 call, buying the 850 for 7 cents. That's what I have represented right here. This is a 7-cent trade. Probability of profit. We don't know what that's going to be yet because the stock's dropped. The stock's actually currently down at 7-Eleven, which is down here. So I think that's a good looking trade. Let's do the other because I want to illustrate this point. You know, George and I were going back and forth about 859. Let me show you what I mean. So here's the other prices that are available. I want to get these off here, one of these off here in a minute. So if you sell the 8-9 call spread, 11 cents. So you could sell this for 11 cents, buy for none. All right, so this one, George, yeah, you get 11 cents on the 1-point spread. You only get 7 cents on the 50-cent spread, but the risk is so much bigger on the wider spread. You only get 12% if you get 11 cents.
Yeah.
And you get 16% if you do the 50 cent. This is the thing about credits. You got to remember that when you widen them, you get more credit, but your risk increases more proportionally. And therefore your return on investment is the best when you tighten those credit spreads up. So this is where I want to go on this one. Let's get filled on this bad boy. And let me see what I want here. So we're going to sell the 8 by the 850, 7 cents credit. How many do I want to do? Keep your risk contained on these for sure. We could do 11, 12, I believe, right? 12, and that will get my risk
Showing
to
7 cents.
500. What?
It's showing 7 cents.
Yeah.
It's just jumped to 8.
Okay.
I got it in for 9 is what I'm trying to get.
All right, I'm gonna do 12 here. I'm gonna try for it. There's 8 cents. Let's see if I can get 8 here. Stock must be coming up a little bit. No, not really. Confirm and send, send. Okay, not getting 8 so far. Let that sit for a little bit. And then one of the things you can do on most broker site is if you, when we keep talking about this, but I don't know if we talk about it on every call. When you place this order, the current mid price is 7.5 cents. I want 8. Haven't gotten it yet. Now, when you place the order initially, the broker will set it on the best exchange, and there's 8 of them. And then as soon as it gets set there, it stays there. So if you want to cancel replace, that'll move it to other exchanges. And then you can do that every 5 minutes or so and until you get a fill. If anybody gets 8 cents, please let me know. I know that 8 cents is not going to be there later this morning. So I'm just going to get filled on it. And if anybody gets filled for 8, I'd go for it for a little bit, but I've got to go do other things here with you guys. And girls. So I'm going to go ahead and get my 7 cents on this. Boom. Got it. Oh, it gave me 8. Didn't it? No, I'm sorry.
7.
It was 7, yeah. So we got our 7 cents times 12. I'm going to save this. And this is a beautiful sniper, everybody. This is how snipers works. So I've saved it. This was filled. I'm going to put this in my portfolio of open sniper trades. This is something that I really recommend that you do. It's really valuable. So now when I go to my portfolio performance, I've got sniper open as a portfolio. I click calculate, and I just have to run this and keep track of all the trades. So there's, it's down because we don't have the most recent data, but it's definitely going to be in good shape. Okay, the other one, no, we could do. I didn't have Mara up here. That's another I forgot to put up. These are the Bitcoin ones, crypto ones you want to keep an eye on. You can do the same thing we just did on Mara, on Bitto, Riot, or Coin. So let's have a play with those. I'm not going to double and triple up on the same industry group. The next thing I want to do is go to Carvana or Disney. Let's look at Disney as a bull. Let's get a little bit of diversification. What's Disney doing? Eisner's back in charge. Wow, Disney's up to 100. I think 100 will hold for now. Earnings were a little bit of a disappointment. The stock gapped up afterwards, 90. So the question now becomes, where does Disney go next? Well, here's the answers: sideways, up, or down. How about not down? How about if we say that this news was so good on Disney that Eisner propelled Disney to higher heights during his reign? He's back. COVID is under control. They also have Disney Plus and ESPN, and so those companies are doing well. And so we could come in here and say, let's sell underneath. Here's why I'm not nervous, but I'm cautious. Let me ask you all, why am I cautious? Why would I not think about selling a put spread under Disney right now? And I've given you a little hint, really a big hint.
Today moving average.
Yeah, it's at resistance.
It's at resistance, yeah. Now the moving average is resistance, this one, the blue, but the one I'm mostly interested in, even beyond the 50-day average, is 100. Look at 100 here across this screen. Support, support, resistance, resistance, support, 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 resistance, support, support, support. Now it's right 100. And I don't want to do anything bullish on this thing unless it cracks 100, because what we could very easily see is Disney start to vacillate between here. So I'm not prepared right now to come in and sell a put spread at 95 or even 90, which is where I'd like to sell something here at 90. And then
So Mike, one of the things I always look at is buy on the rumor, sell on the news. That's another dangerous reason to not sell a put spread. Let 2 or 3 days make it happen, because you have no idea what the knee-jerk reaction is going to be.
yeah, that's another way to say what I just said. Exactly.
Yeah.
I don't know what's going to happen now. 100, technically speaking, I need the stock above 100. Knee jerk reaction. Not much has happened. The stock has got the high of the day is 189. So it dipped above 100, hanging at 100. We wait on Disney. We see what it does tomorrow. This could be a really good broken wing butterfly candidate, you know. Bearish broken wing butterfly on this one is I'd be on that one all day long. So if anybody knows how to trade them, has the scanners, start looking for bearish broken wings on this one, or even bullish for that matter. Do both, and play that more safely. Okay, what else did I have here? Carvana. Again, we could jump all over these. There's plenty of bear call spreads on these you could play with. We've got 14 minutes left. Let's take a look at Carvana. CVNA. Yeah, man. I gotta stop laughing. I'm laughing because it's easier to make money on these stocks. That's because I'm excited about that. I'm not excited about a company going out of business at all. I don't think that's funny. But there's been some downgrades. Downgraded to sell. Let's see what else. They cut 1,500 jobs again. Citing economic concerns. Used car prices are falling. You know, they lowered their future guidance after earnings. The stock's in trouble. So certainly I would think a very valid prognosis on Carvana would be not up. So from a sniper perspective, you'd want to be selling bear call spreads on Carvana. Now I do like butterflies on Carvana and even iron condors, but simply because it's snipers and it's more basic, what I'd like to do is come in and look for bear call spreads on Carvana. Now this is going to be based on Friday's data. What's the stock doing today? I didn't check. The stock is down 6% today to 750. So I like selling at 8 on this one, maybe 9. Let's see what's available as of Friday's data. Searchers, single strategy, call credit, default short term, Carvana, CVNA. Let's see what's out there as of Friday. There's none that come through the scanners, maybe because of slippage. So what I'm going to do now is go into trade here. And again, this is similar to the Mara trade that we just did. We could put a trade on that expires Friday, and we get an extra day and a half of Theta, free Theta. The question becomes, where do you want to sell? Hold on a minute. Okay. Now I see why. Look at our slippage here. That's not too bad, actually. Again, these are November 25 options, expire in 4 days, a day and a half of free Theta. We've got 750. Actually, slippage is pretty good now. It was a little tight earlier. It's about 5 cents, which is not bad. Okay, so where do we want to sell? Let me go back to vertical. Do I want to sell at 850? I can just kind of get a rough idea of the prices by hitting the bid price here. $8 would be the place I would think about most, that I'd like to maybe check here. If we sell at 8, that's 15 cents with 35 cents of debit. That's phenomenal. 8.5, 5 cents. There we go. 8.5. There's 10 cents there. So a little wide, but there's 10 cents at 8.50. Let me build this for you so you can see it. In Tom's tools, we can see the risk graph. The dreaded sell recommendation. We love them. 30. And Marcia, I looked at Duke as well. And I didn't see any news other than it was just downgraded. I don't know what's up with that. If you have any more data, let me know. Let us know. All right, this is the trade I'm looking at right
will
now. What? Okay.
I
So-
will look.
Okay, thank you. 859 for 10 cents. Sell the 859 for 10 cents. So I'm just forcing 10 cents credit in this trade. And that's going to give you us 25% by Friday. What? Yeah, let me say it again. It's going to give us 25% by Friday, as long as Carvana with an anchor around its neck doesn't pop back up. And it could. That's the thing. It's not that far away. We could also consider selling 9. Let's see what's there. This would be super duper safe. Super duper extra. Califragilistic good. So the 950 gives you 5 cents by Friday. Let me show it to you. There's a couple of options here for you, pun intended. So I'm going to sell the 9 now and buy the 950. And we're going to get, what are we getting here? 5 cents. Doesn't sound like a lot, but for a 50-cent wide spread, bring it down here. Oh, I see what I did. All right, so if you did this now, you could get filled for approximately 5 cents. That's 11% over the next 7 days. Well, by Friday, which is 4 days today. And so there's two potential trades. This one at 850 with the stock trading at 750 with an anchor around its neck is the one I think I would go for. I would step up closer to the heat with the stock currently trading down here at 750, right in this range, with an anchor around its neck, sell recommendation, all that. Your probability of profit isn't going to be as high, but 25% by Friday is phenomenal, especially with the extra days the stock can't move while we're getting theta. This one is more very much more likely to be a profit at 11% by Friday, which is really good as well. 11% in what's going to come to be 4 days of trading activity. So there's 2 of them. I'll let you consider both. The one I'm going to go for, though, is this one here at 850 with the stock at 750. The stock is at 750. It has to rise $1, which percentage-wise is a lot. And that's what I'm going to do. I'm going to go after the 850 or 850. This one. Sell the 850, buy the 9. Let me do it. If I can use my computer here, that would help. 859. There it is. Sell the 850, buy the 9. I'm having trouble with my Zoom computer stuff here.
Hey, you're
All right.
selling the 9. There you go.
Yeah, I know what I'm doing here. I just got to manage my computer. I understand the process, actually. Believe it or not, despite the evidence that you see on the screen here. Okay, so we're selling 850, buying the 9. And 10 cents, that's what's shown. How many do I want to do? Well, 12 would get me to 480. So I'll do 12 contracts here. And again, okay, so I'll do 12. That gets my max risk to 480. And let's do that. Now it's down to 10 cents. Shoot, I shouldn't have waited. I'm going to ask for 10. May not get it at this stage. I was jammering too much. You got to do this in the first half hour. That's when the credit is really good. Now it's only down to 5 cents. The stock's at 740. That's why. So I'll put this out there and let it fish. We'll just fish for it. All right. So if it fills, I'll certainly give it to you on the on the boards. Actually, we got filled on the Carvana. I'm sorry, not the Carvana trade. This other credit spread on Mara. I'll post that on the boards a bit later once the class ends here, and you'll also see them in the WhatsApp live feed. All right. Is anybody out there playing with Carvana? Okay.
Yeah, I got it at 9.50 and 9 for a nickel.
You sold it for a nickel?
Yeah.
All right. Let's see if we can get that one here. That's the one I like too better, George. Yeah, I like that one. Let me see. Now we're at to 750. We still may get that one. I'm going to cancel replace. No, I'm going to create a new order. I'm going to create a duplicate order. And I'm going to go after the one George just got filled on for 5 cents, which was selling the 9 and buying the 950. Let's buy the 950. Showing 5 cents. Okay. I'll keep it at 12. That's fine.
I just got the 859 at 9 cents.
You got it for 9?
Yeah.
Yeah, I would take that.
Yeah, I would too.
Yeah, that's great. Let me drop it to 9 here, but I'll track it at 9 since you got filled at 9.
Is that a magic computer, Andrew?
Yeah, he knows people, man. It's because of the size of his account, he gets special.
Keep dreaming.
Yeah, I am. All right. So that filled at 9. All right. We've got about 4 minutes. I'm going to keep the calls, these sniper calls, right at an hour. We're going to start doing more of that in the coming months. We're conscious that, well, I'm conscious that I have to talk for the whole time, but I'm also conscious that each of you have to, are sitting there listening for all this time, and we want to keep the calls tight and consolidated.
Yep.
All right. Now, so we got Carvana, Disney we talked about. Simon Property Group was another I was looking at this morning. This is shopping malls. And Simon Property Group has done really well after earnings. They're now above the 50-day average. And, you know, they're shopping malls. So people are going back to the stores. It's Christmas coming up. Let's see, what did I see? Here we go. This is what got my attention when I read the earnings. So 11.1 on earnings. The stock came out, was bouncing against its 200-day average, and they raised their full year outlook for next year. They reported higher than expected earnings per share. Their earnings were up, and they raised their outlook. That is the ideal bullish opportunity to look for Sniper. And so then with that established, then what we can do is go right into the scanner. And we can say, hey, scanner, Mr. Scanner, single, put credit. You can do short-term or long-term. I would do short-term in this case, Simon Property Group. And that's it. Short-term, default parameter short-term, the stock we like, search. What do we got? 80% chance to make 20% over the next 28 days. This is a longer term trade. I'm a little nervous about longer term, to be honest. As for short terms, this is a 28-day trade, and the line in the sand is 110. So when you do these bull put spreads, bullish credit spreads, this line in the sand is short, 110. We need the stock above 110, hit pick 3, and 110 is right there. That's a good line in the sand. Why? Well, the stock is above 115 resistance. Okay, so the stock is currently above there, and it's got resistance or support now, which will potentially keep the stock from dropping. And then you have the 200, and then you have 110, the 110 put right there. So that's okay. The question mark I have is, do I want to wait 28 days in this crazy market?
It's a monthly, so you have no choice.
Yeah, well, I do have a choice. My choice is don't do it because it's too long.
Right.
Yeah. So yeah, there might not be any other choices, and there isn't. December 16 is as far out as we can go, and I can look here and say, all right, Well, if we sell at, let's just pull up the risk graph. We sell at 110. There's my current sell price at 110 is 85 cents. That's what we're getting there. So that's available. Statistical probability of profit is 80%. And if I want to get further away to 105, then we make 44 cents. So basically what that means is our ROI drops to 10% over 28 days. It's just too risky to me. There's other better trades. There's not enough granularity on the expiration dates. We only have December, the next ones, and there's nothing we can do to get shorter term on that. So that's my stance, and certainly it's reasonable to conclude that the stock will stay above this short strike once again at 110. That it's a good, technically viable trade, prognosis that the stock will stay above 110 between now and December the 16th. But there's probably better ones. Okay, there we go, everybody. That's our sniper call. Now we're going to do one more snipers like this, and then beginning in the first Monday in December, we're going to go through some education. So we're going to move through Tom's tools. We're going to open this up to more people to come. We're not going to do just credit spreads. We'll play around with, using Money Calendar or Darknet, Alpha 9, Velocity Trader, the volume spikes, all of those things we'll start playing with going forward. So we'll have like 10 minutes of market, about 10 minutes of a new education, and then live trading. So that's what snipers will be going forward. All right, everybody, thank you so much for attending. If this is your last call of the week, I wish everybody a happy break, happy holidays. Some of us in the States are celebrating Thanksgiving, but I wish everybody a really happy break. Certainly the markets are closed on Thursdays, at least have that. All right, any last questions before we wrap our snipers call for today? All right. All right, have fun with crypto, everybody. It's
Thanks,
a drop. Thanks, everybody.
Happy Thanksgiving.
See you guys. See you soon.
Thanks,
See you at
Mike.
everything today. Thank you.